The United States, home to some of the richest people in the world, like by a large margin. Thanks in part to capitalism, what do individuals that have millions, if not billions of dollars do with their money on a daily basis? Today we will be diving into a company that allows the 1% to use their wealth to the true potential, and we're talking about none other than the private banks of America, more specifically, Goldman Sachs. Goldman Sachs Private Bank Select is a company with one objective: make the rich even richer, because who doesn't like upgrading from a 50-foot yacht to a 51-foot one? Before we go deeper, who are these rich people we're talking about? These rich people can best be described as individuals with FU money. What is FU money, you might ask? Well, FU money stands for people with Oh, I can't say that. It's a college. You gotta keep it PG. Okay. Fair enough. Here's a visual representation. Do you ever get home from work and open your door to be hit in the face with loads of money? Do your Lamborghinis take up your entire driveway? Then you are our perfect client. Goldman Sachs Private Bank serves individuals with a net worth of at least $10 million. It focuses on these individuals and offers financing that you usually wouldn't see at a normal bank. For example, are you trying to purchase your own copy of the Mona Lisa? A private bank has you. Are you tired of your sports team losing? Go to a private bank and finance the purchase of the entire stadium. And finally, are you looking to upgrade your yacht to show your neighbor that size does matter? Well, we got you. When looking at the financials of Goldman Sachs Private Bank, the private wealth management section actually makes up a pretty small portion. They brought in $1.63 billion year-to-date revenue, which is a vast improvement of the $1.1 billion from 2021. Most of their revenues from private banking come from lending out loans of upwards of $30 to $50 million to finance these large purchases. In contrast, one private bank client is equivalent to probably about 500 regular banking clients. To understand how a bank takes these liabilities and turns it into an asset, let's follow this flow chart. When an individual with a minimum of $10 million brings it in, this money is turned into a liability for the bank because they have to control and manage it. Now, usually that $10 million is not just sitting there for these individuals, so the bank will then in turn take it and invest it in securities for a commission or lend it out for interest. Now note the unique thing here is if they have $10 million, they can lend out way more than $10 million thanks to something called the Federal Reserve deposit requirements. All you need to know about that is that $10 million can magically turn into about $50 million just by being deposited. Due to the nature of these investors as well, they can also be considered accredited investors and go into investing strategies where they can earn a lot larger commission for the bank than compared to a mutual fund. And this is where we get into the financial markets that they participate in. Usually the extent that an average US investor gets into is the secondary market with securities. However, the cat is out of the bag when you get into the private banking world. Long story short, when you got this much money, the SEC thinks you're smart enough to basically do whatever you want with it. This opens the door for futures trading, speculative private placements, direct partnerships, angel investing, and so on. The reason this is so unique is because 99% of the US population is banned from entering most of these investments because they are deemed too speculative, risky, or advanced for the average retail trader. So long story short, the private banks use this to their advantage, and there is nothing that is off the table. Anything out there that can either hedge or make the client money is being utilized in this space.
Question number 5. What is one recommendation you would make to their top leadership to improve financial performance?
Wait. He wants me to recommend to the biggest financial corporations out there. Give me a second. All right, well, here goes nothing. Despite Goldman Sachs growing revenues from their private banking, they can always improve in some areas, specifically taking notes after the Swiss and doing more tax lucrative loopholes. I mean, look at the papers. He didn't say it had to be legal. It just had to be something I could pitch to the team, right? Okay, one more try. The honest truth is, like a lot of companies that are in this financial sector, is they're kind of falling behind on technology. The senior staff is a little bit more elder and not able to connect with some of the newer generations of wealth that is being created. To take an example of this, open up their app right now and it looks like something out of 1999. On top of that, Goldman Sachs private bank managers haven't been able to outperform other people that are in the same industry like JP Morgan Private Bank, the Swiss National Bank, or Merrill Lynch. Despite having an excessive marketing budget, their best course of action would probably divert assets into performance rather than name recognition. Overall, though, Goldman Sachs is a good corporate citizen as long as you ignore the $16 billion in cumulative fines over the course since 2000. The company's financials are strong and are showing signs of growth, so I see no reason why you shouldn't want to invest in this company.